Welcome you all. In this session, we are going to discuss about private equity distribution process, like how distribution works, what are the types of distribution or what are the types of waterfall calculations. So we'll discuss that in details. See, in a private equity, you can see different types of private equity funds like real estate private equity funds, commercial real estate private equity funds, or startup investing private equity funds, or I would say like any infrastructure related private equity funds and all. So anyways, see, waterfall calculation basically differ from the structure to structure. So now in this particular session, we are going to just discuss about what are the types of private equity waterfall calculations and all. So basically there are two types of waterfall calculation. Waterfall, it means guys distribution method, right? Distribution method. So when we say distribution, it means in a private equity business, what happened when we raise funds from the investors? So we basically commit, means fund manager commit to the investor that fund will return back to the investor along with means capital, interest, and the gain, whatever gain is there. So that all will distribute to the investor back at the time of maturity. So that process basically we'll call it as a waterfall. And waterfall has a two types. One is deal by deal model and another one is whole deal model. So deal by deal model basically, which is from the US, United States of America, and whole deal model, which is basically from UK, United Kingdom. All right. So now let's discuss about deal by deal model. So when we say deal by deal model, it means it's a per deal basis model. So when we say per deal basis model, it means try to understand it. Let's say there is one fund like GMT fund, and GMT fund has three different investments, one which is in OpenAI, Binance, and SpaceX, and all three deals which has a different exit process. Like OpenAI investment will exit in 2025, Binance will exit in 2026, and SpaceX will exit in 2027. So here basically what happened, see, when the deal, this particular investment mature, like this first investment will mature in 2025, then whatever profit and loss which is the generated, that profit will be distributed to the investor. Profit or loss, whatever it is, that will be distributed to the investor, and the general partner also will receive the 20% their split. 20% split, it means carry fee it will receive to the general partners. So that process basically we'll call it as a deal by deal model. All right. So if I talk about feature of the deal by deal model, so profit distributed per deal once profitable to the limited partners, and GP may receive their higher split. Clawback which is needed in this particular deal. Why? The reason is, see, clawback is nothing but it's a provision where hold back the profit which is which has received to the general partners from the profitable deals, because if something, let's say, happened with the next deal, so that profit can be reversed back to the private equity fund. So that's what the clawback which is needed. But this particular process, we'll call it as a deal by deal model. Now if I talk about whole deal model, whole deal model, it means, let's say the GMT fund has different deals, which is OpenAI, SpaceX, and the solar investments, and all will be exited in 2025. So in that case, what happened? Profit or loss, whatever it is, that will be distributed after the the fund level performance. It means this fund level performance will be checked, and on the basis of that, profit and loss will be distributed. Limited partners means LPs receive whole payment first. So it means in this particular process, limited partners also will receive their percentage, and clawback which is not actually needed in whole deal model, but general partner receive their percentage at the end of this, this distribution process. So it means limited partners will receive their capital, interest, committed gain, and remaining it will split with 80% to the LPs and 20% to the GPs. So this particular 20% we are talking about split. That split will receive to the LPs. GP, general partners. GP means general partners. General partner, it means fund manager. So that will receive to them. So now if I talk about the waterfall process, as we have discussed, there are two types. But when we say waterfall, it means it's a distribution calculation process. So in a distribution calculation, private equity fund basically return the capital which was raised from the limited partners. It will return to them. Then return of profit or income, whatever profit generated through investing, that profit also it will be returned to the investor back. And return of reserve or excess of cash, whatever which is with the fund, that also it will return back to the investor. Now from the interview perspective, two things are very important. See, in a private equity, there are two things, as I said. One is like normal private equity fund, and another one is real estate private equity fund. See, definitely you may expect questions on how to calculate levered and unlevered in a waterfall calculation, or I would say how we can prepare the debt waterfall calculation process or distribution process and all. That definitely you may expect. And in case of real estate, in a real estate, there would be lots of assumption like vacancy rate, then rental income, their yield, their expenses, maintenance cost. There will be lots of ifs and buts that we need to consider while distributing or calculating yields, and that all comes under your distribution, and you may definitely expect questions around that part only. So now I'll come to the main point. So if you want to understand the calculation part, how calculation works, then you can join my private real estate private equity program. So where the industry experts, they have contributed their efforts to design this real estate private equity program. So you can enroll to this program and upskill yourself on real estate private equity as well as the normal private equity accounting. Now your question would be like, sir, why should I enroll? Because see, there's two, real estate and normal private equity, both are highly growing segment at the moment, so you can enroll there. So if you need any clarification or if you need any information regarding the course, you can reach out to us directly. My team will support you. Otherwise, you can enjoy learning and you can check my other videos as well. So thank you very much for watching this. If you like this, please don't forget to click on bell icon and as well as put a comment in the comment section. Thank you.